Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to keep the show short. We're just going to talk quickly about the Primary Vision Frac Spread Count and just really, dive in a little bit to see, okay, well, what's happening? How are things changing? And then we'll let you get to your weekend. So let's just dive right in. And right now, the Frac Spread Count came in at 64. So we had a decline of 10. And if you think about where we were, so the same time last year, we were at about 397. So just to kind of put that all into context, in 2020, we're down about 500 rigs and anywhere from 275 to 300 spreads through the calendar year. So you can see the slowdown has been very aggressive over time, but we're also starting to see that level off. We talked about how we were going to start to see this spits and starts, and things were going to adjust, probably anywhere from 5 to 10 by week. And again, we're still kind of hanging in this range of like 65 to 80, which is where we think we'll probably live over the next few weeks. And if you think about what has changed, what's adjusted, we had some adjustments over the time period, really coming in from the natural gas regions, which if you look at the curve, if you look at futures spot, it makes sense to see some of that slow down, especially as just those burn rates haven't really been able to keep up, even though the weather has gotten a little bit warmer and we've seen some of those pulls come through. So the Permian, we think, is starting to really bottom out. We lost one rig in the Permian. The frac spread is kind of hanging around this level, and we think that there's going to be kind of this normalization, and then we're going to start to see that grind higher. But again, it's going to be within this range at least through July, and then in August, there could be a little bit of a pickup. But again, it's all going to be price dependent, and prices remain within this $40 to $41 range. Exports will have a little bit of support this week and then going into next week, just given where we are on a pricing scale. But, there's these different adjustments that we're always going to look at, and then we'll talk in more depth next week. But, Libya is starting to bring some production back on. Again, it's small, but production, we're always going to look at it, see how things are adjusting. So there's really not too much to look at just today in terms of where we are. We're just going to be in this kind of confidence range going forward, and then we'll see if there's any kind of traction that we're going to start getting in some of these oil areas, because we think that the Permian and other parts of Texas could start to see some interest, especially as refiners kind of get into this 75-77% utilization rate, and we're starting to see some of these imports come down and normalize. But again, we have a demand problem. So we need that supply to kind of marry with where the demand is. And, those are things that are going to take time to normalize. So next week, we're going to go through our typical EIA, our global roundup, and then we'll really dig in on some of the macro data that's come out over, by the end of this week and then into the beginning of next week, just because we think that that's going to continue to be a headwind for where we think some of this demand is going to come from. So again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Have a great weekend. Thanks.